Hi, I'm Tim Sustak, Chief Credit Officer with Vizo Financial, and this is your FOMC update for the October 2019 meeting. Again, with no real surprise, the Fed chose to lower the target range for the federal funds rate 25 basis points at its October meeting, which puts the range at 1.5% to 1.75%. The Fed also decided to lower the rate it pays on required and excess reserves by 25 basis points, which now puts the rate at 1.55%. The Fed statement following the meeting did not change much from September, though there was one key change. In place of the phrase it had been using to describe the thought around future rate decreases, which was, continue to monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion, the October statement says, continue to monitor the implications of incoming information for the economic outlook as it assesses the appropriate path for the target range for the federal funds rate. Most take this to mean that the committee has now hit the pause button regarding future rate actions as it monitors the economic data for reaction to its recent rate moves. There were differing ideas concerning the appropriate rate move at the October meeting, both in the marketplace and within the FOMC. The committee remained divided on the most recent rate action, with two members, Kansas City Fed President Esther George and Boston Fed President Eric Rosengren, dissenting with the rate reduction in favor of no action. Now that they're presumably on pause for a while, it may give the committee a chance to unify concerning what comes next. A look at Chairman Powell's press conference after the break.
Your employees are more than just people who work at your credit union. They are advice givers, solution seekers, and unwavering advocates for your members. It's only fitting that we be their advocate too. With iCare through Vizo Financial and our partner, Interlutions, your credit union can offer better employee health care for less. Gain access to more providers, build custom plans, and minimize your costs through cooperative buying. These people are the face of your credit union. Make sure they're always smiling with iCare.
Welcome back. Where do we go from here? Based on Chairman Powell's comments after the latest rate decision, it looks like we'll stay in port for a while and wait till the fog clears. By that I mean, the chairman made it pretty clear that the committee believes they have done what is required at this point to maintain the expansion, and they will now wait and see what effect the recent round of rate cuts has on the economic data. In his press conference, the chairman said that, the policy adjustments we have made since last year are providing, and will continue to provide, meaningful support to the economy. We believe that monetary policy is in a good place. Further, he said that, since monetary policy operates with a lag, the full effects of these adjustments on economic growth, the job market, and inflation will be realized over time. We see the current stance of monetary policy as likely to remain appropriate as long as incoming information about the economy remains broadly consistent with our outlook of moderate economic growth, a strong labor market, and inflation near our symmetric 2% objective. He reiterated that monetary policy is not on a preset course. About the overall economy, the chairman indicated that the U.S. economy is in an 11th year of expansion and the outlook remains favorable. So, it looks like the FOMC has done their work and will now wait and see what happens. The market still gives some weight to further cuts, showing about a 27% chance of a cut at the December meeting and a 79% chance of further cuts by the end of 2020. Right now, the economy seems to be holding its own, but it's hard to say how long that will be the case, as it's no secret the expansion will not last forever. Also, there are still some big levers out there that could move the economic outlook one way or the other, like US-China trade tensions, the 2020 election, and Brexit, so things should stay interesting for some time to come. That's the update for the October FOMC meeting. Thanks for watching.